It gives me great pleasure to welcome you all to today's Integrated Business Solutions case study session. In this session, we will take a deep dive into fast moving consumer goods and value retailing segments. This is a dynamic, innovation led, and increasingly regulated industry that significantly impacts consumer behavior, supply chain strategy, and overall economic activity both at national as well as at global level. Let me begin by asking a quick question. Have you ever walked into a shop, seen something priced at rupees 99 and bought it just because it looked cheap, even if you didn't really need it? You are not alone. This behavior is exactly what the rupees 99 store industry is built upon. Across India, in high streets, metro stations, and even small towns, we see stores that follow a very specific format. Everything inside is priced at rupees 99 or sometimes rupees 199. These are not just random shops, they follow a clear, deliberate business strategy. What is the rupees 99 store model? These stores offers toys, fashion accessories, kitchen items, phone covers, beauty products, all at one flat price point. The idea is simple. Idea is very simple. Attract consumers through affordability and volume. Some operate under known names like MRP 99, others are unbranded setups, and some even operate online via Instagram or WhatsApp. So, what strategy are they using? This is a classic case of cost leadership. Cost leadership as defined in Porter's generic strategies. They focus on offering products at lowest possible cost and they make profits through volume, not margin. A traditional retailer may earn rupees 100 profit per item but sell only 200 units. A 99 store may earn just rupees 10 per item but sell 5,000 items in the same time. That's rupees 50,000 versus rupees 20,000. Now, let us talk about another trick, psychological pricing. Rupees 99 feels cheaper than rupees 100. It makes us believe we are saving money even though the difference is just rupees 1. It's the same reason products are often priced at rupees 499 instead of rupees 500 or 999 instead of rupees 1000. These stores are focused on fast inventory turnover. The products are usually non perishable, unbranded, or surplus stock. They are bought in bulk, sold fast, and replaced frequently. There's no fancy packaging or displays, just efficiency. Operations are lean. Please note here operations are lean, shops are small, staff is limited, and rent is kept low. They source directly from low cost manufacturing countries like often from India, China, Bangladesh. This links perfectly to what we study in strategic cost management subject. The concepts like target costing, CVP analysis, pricing decisions, suppliers negotiation, all in real action. In this case study, all things are in real action. You can see This in stores like MRP 99 in Delhi, Value 99 online, international formats like Miniso, which applies similar pricing logic, even if it is not always rupees 99. They have understood what their target customers want: low price, fast access, and variety. Low price, fast access, and variety. But this model is not risk free. What if inventory doesn't sell? What if quality concerns drive away customers? What if bigger players enter the market? To handle this, many stores offer combo sales, seasonal sales, use social media marketing to attract footfall without spending much. So next time you walk to 99 store, look beyond the cheap price tag. What you are really seeing in the world example of strategic cost management, customer psychology, and agile business execution. This is what makes business strategy exciting. It is not just for boardrooms. It is alive, it is around us, it is something every entrepreneur can learn from. This case study integrates multiple concepts across disciplines, including accessible value as per Rule 8, read with Rule 4, money market hedge strategies, Section 14A of FEMA, McKinsey 7S, Section 161 of the Companies Act, Porter's 5 Forces, and AS 115, revenue from customers. Okay, it is designed to promote higher order thinking by requiring students to analyze, evaluate, and recommend practical actions in a realistic and industry specific business context. Students, case study is already uploaded on Knowledge Portal. Please review for better understanding. Today's session is interactive. You are encouraged to ask questions in English or Hindi. Feel free to speak or type your queries in the chat box. We have kept the last 15 minutes for general question and answers. This can include your exams query or preparation strategies or doubts on any general issues. Okay, we have privilege to welcome C. Amit Gupta sir, a distinguished chartered accountant with wide-ranging experience across sectors such as retail, consumer goods, and other industries, with deep expertise in audit. Student sir has very deep expertise in audit and a professional background that includes experience at one of the big four firms. Sir brings a unique combination of academic insight and practical business insight. We are sincerely grateful to him for joining us today, especially during this peak audit season, and for taking the time to guide and inspire the future chartered accountants among us. With that, let us begin. I now invite CA Amit Gupta sir to lead us through this engaging business case. Sir, over to you.
Thank you. Thank you. Thank you, Deepak.
Yes, sir. Yes, sir.
Yeah. Thank you, Deepak, for setting the context and sharing the brief about the entire case study and also introducing me as well. Thank you so much for that. I welcome all the students who are on the Zoom platform and watching on the YouTube this broadcast. So today, the way we will run this case study is, as Deepak ji has said, is that this is about Daily Mart 99, that retail store. My understanding is that this case study is available to all of you already through the knowledge portal. So some of you might have had opportunity to read through the case study. It is not a very lengthy case study. Maybe some of you might have read it. So what the way we'll progress is that I'll first brief you about the business model of Daily Mart 99. Then we will progress towards the questions directly. And from the questions, I will try to explain the context of those questions and what Daily Mart 99 is going through these days and what the situations which they are facing. The session, while this is of over 2.5 hours, but I think we will take about 1.5 hours, and we will break in for 10-15 minutes in between. So that's how we will do it. Let me share my screen and begin. Is my screen visible to everybody?
No, sir.
No, sir.
Okay, let me just give me. Is it visible now?
Yes, sir.
Okay.
Yes, sir. Visible, sir.
Okay. Thank you. Thank you. Okay. So Daily Mart 19, which is the case study which we have, as Deepak ji said, is a value store which sells all articles at 99 rupees each. They are currently established in India, and they sell the goods obviously in Indian currency, which is rupees. The products which they sell are ambient products, which is non-perishable products. The items which are there, these are functional, standardized products. The key is that these products are unbranded and they're undifferentiated. So, like we took an example of, say, DIY, do it yourself. Some of you might have visited those stores, or Miniso stores, or some of these 99 rupee stores as well. So these products are clearly not really differentiated. These are utility items which you use and buy on a daily basis. The only other thing which they also sell is the small pack of almonds which they import from USA. Now, the way their business is structured, as you can imagine, is that this is the buyer's business, where the consumer is somebody who has the choice of selecting which store they want to go to. So the stores of Daily Mart 99 have to operate under the operational efficient model, which is cost efficient and effective as well. So they deal with several suppliers, and for most of these suppliers, Daily Mart 99 is the key customer. So the suppliers to Daily Mart 99 are not in a position to really negotiate. They are you can say they are on the mercy of the Daily Mart 99. And so Daily Mart 99 is their key customer. Now, this situation is very similar to some of you might be familiar with the auto industry, where the auto industry is about 20 odd players in the market, where they're called original equipment manufacturers, basically the passenger vehicle manufacturers like Maruti, Mahindra, BMW, and so on and so forth. So since they are the OEMs, their auto component manufacturers are dependent on the car manufacturers. So as such, they're not in a position to really negotiate much with the car manufacturers, because they are the ones who dictate the terms. So it's a similar type of a situation, basically. As we were discussing earlier, so essentially they operate on a low profit margin. So it's a volume game. So high volume, low profit margin, operate on less staff, lean model, low rentals. So, and it is obviously target price driven. So you have to keep the price at 99. That's the business model which they are in. From a customer standpoint, the proposition is essentially that these are value for money products, utility products, 99 price, and affordable for the customer standpoint. So this is the context of Daily 99 as your legal entity, which you are studying today. Let me jump to the questions, and then from the questions we will keep coming back to where this business is as of today and what situation they are facing actually. So let's just first go to the question which is on the business forces which are at play, and then I'll come back. sorry for my flipping the screen because I need to go back and forth. So in your case study, the question number one is about a situation where Daily Mart 99, which is an established player in India, now they are evaluating whether to enter a neighboring market, Bangladesh or not. So this question is about that what assessment is required, how will that assessment be made from a Daily Mart 99 standpoint. Now, just maybe pausing here a little bit and just giving a context. For example, 5 years back, right, when Zomato, Swiggy, these were all delivery companies, right? They were into e-commerce delivery, food delivery, and all of that. They looked at a business opportunity, which is quick delivery, right? So at that time, they have to make a business decision and evaluate that whether to enter into quick delivery or not, right? Which is under 10 minutes, under 20 minutes, and so on and so forth. So so business then faces the challenge of analyzing several aspects of it, that whether how will the funding be arranged for an acquisition, whether our current business model is scaled up to the level to support the new business requirements and things like that. So keeping that in mind, we'll just go to the relevant slides. Let me first introduce you to a concept in this regard. Just a second. Yeah. You can see my screen, right? Yeah. Yeah. Okay. So this is a model which you see on the screen, which has been developed by Michael Porter, and he was a Harvard professor in 1980s, and these old business theories remain very relevant even today. So what he has spoken about is five things, and then I will put them into the context of Daily Mart. Uh, what he's talking about is that when you are thinking of entering into a new market, which is Bangladesh, what you need to look at is that at the center is who are your existing competitors? Are the suppliers who gain power here, or is it the buyers? Are there any threats to new entrants? So if Delhi Mart is wanting to enter into the market, is there any deterrent for them to enter the market? And are there any real substitutes available with the buyers from substituting Delhi Mart? Now let's go back to the case study. Okay. So here, this is the context from a Bangladesh standpoint. Now, the way the case study is set up is that it says that there is an economic downturn currently in Bangladesh, which is the neighboring country of India. While the economic downturn is there, there is the fixed price retail stores like Daily Mart 99 are also coming up in the Bangladesh market. There are four of these as of now which are present. So there is Retail 99, Club Basket 99, Daily Shop 99, and Quick Buy 99. So out of these four, three players have been in the market for more than 5 years. And the last one has entered the market in April 2023. Each of these players have their own strengths in terms of the target which they have on product and pricing. They're on your screen. I'll not mention them. Now, from a Daily Mart standpoint, when it is looking at to enter this market, what insight do they have as of now? As of now, they are seeing that, okay, there is growing popularity of the 99 model, which is there. So which indicates that there is a market opportunity beyond India for Daily Mart, which is available. There is a cross-border strategic awareness and competitive benchmarking, which is required in this case. And they will have to evaluate the entry barriers. How will the supply chain figure out the branding differentiation from the existing players? How will they do this? So these are the things which they are sitting on as of now. Now, in terms of studying the market from their perspective, so the way it works is that the current players, which are the four players I spoke about, their combined revenues have increased from 14 crores in March 23 to March 25 to 22 crore rupees. So it's a significant jump. So essentially, it's gone up significantly, which shows that there is significant growth in the market year on year, which is there. So this indicates that Daily Mart will be in a position to also uh, Daily Mart will also be in a position to have acceptance for their pricing model because these players are able to make a mark. Another fact is around the existing strategies of the existing players in terms of where are they present. So in Bangladesh market, they are currently not present in the main cities. They are present in you can say maybe tier 2 or tier 3 type of places where they are present in the either in the main city market or in the main village market. They're currently available, and they choose the locations which are going to give them high footfall and low rental, essentially, because that's the business model which these existing players are operating on. Because of the economic downturn, the supply of retail spaces is there for the players. So the landlords in the market are able to get into short-term leases as compared to long-term leases. If any of you have worked in the retail sector, you would know that essentially the retail sector has very long-term leases of about 15 to 20 years. Whereas in this case, they're willing to get into short-term leases as well. And since the economic downturn is there, they are of low value rental, which is good for their business. And this is the ideal condition for an aggressive expansion, basically, for the current players which are there. So this is the current prevailing real estate dynamics of the market, Bangladesh market. Now, to expand the business, the players are currently either using frequent announcements of the new stores as an expansion strategy or in terms of awareness strategy. They're using social media, local advertisement, outdoor promotions, and various other means to attract the new customers and increase footfalls. Now, from this standpoint, with all this detail being available on the desk of Daily Mart 99, which is our company, what is it which they need to factor in, right? So they have a first mover advantage from a region standpoint because they are a dominant player in Indian market now, and they are a large player. So if they enter into Bangladesh, they have a chance of dominating that market as well. But the emphasis would have to be that how much they can do this with speed, their cost control, and location intelligence. I don't know if many of you might have thought about retail sector. Retail sector is largely driven by the location intelligence, where choosing the retail store is one of the key things. Yeah. So to solve this problem for Daily Mart, what do they do? So what they do is they have set up a survey, basically. They've set up a survey to assess that what is the current strength in the Bangladesh market. When the survey results came out, what they learned is that people who are in the retail industry, they are familiar with the name of Daily Mart 99. They know that this is an Indian discount chain, which is quite large. Whereas when they look at general consumers who are going to be their buyers, the only 10% of such buyers were actually aware about Daily Mart. So what it means is that the brand recognition is actually not there for Daily Mart. And they will have to do some work around that. Whereas the buyers were fully aware of the remaining four players. So in that sense, this is an entry barrier, which is there. The question which we will try to answer when we'll come back to that. So like I said, that brand pull is not there. and they would have to work hard towards establishing a strong local presence. Yeah. The other thing which works in favor of Daily Mart 99 is that they have the financial strength, because their current revenues and profits are far sizable as compared to what they are for all the players combined. So essentially, Daily Mart 99 is larger in size as compared to all four players combined. So their financial strength is something which is going to help them in terms of entering the market. They can get into aggressive brand positioning. They can lease multiple stores at one time, so that all this will be in their favor. The other things which work for Daily Mart 99 in this case is that since it's an established player in Indian market, they have a established procurement and supplier management, which has specialized in expertise in cost efficient procurement and procuring high quality at low price points. Logistics and distribution, as you can imagine, in a retail business, procuring goods from the suppliers and then getting these goods from the suppliers to the warehouses and warehouses to the stores, and continuously keeping the pace of it, refilling the shelves, is something which is a continuous process, right? So that's something which they're good at. That's one of their strengths. The other strength which they have is that they are well positioned to scale up quickly in Bangladesh because of their internal strengths and values which they built in during their business in India. Yeah. As you can imagine, they have a strong team which is across retail operations, supply chain, finance, marketing, technology absorption, and several other capabilities. Now let me go back to the question which we started from, basically. So this was the chart which we started from, and we discussed about the various aspects which Daily Mart 99 currently needs to evaluate. This is the Michael Porter's chart which is there. Now, correlating each of these, so if we think about suppliers and buyers first, right? So initially, I discussed about that, is it a buyer's market or a supplier's market? This is the buyer's market, basically, because in this case, it's the buyer who decides once he enters in a mall or for shopping, which store he wants to step in, right? There's not much brand recall, etc., which is there. So it's the buyer who decides. Supplier, like I said earlier, is not in a position to really negotiate. He is somebody who is on the mercy of the retail chain in this case, which will be Bangladesh retail chains also and Daily Mart also. So what works here is that here, from a supplier standpoint, Daily Mart 99 has strength because they already have existing suppliers which are working for them in Indian market. They can reposition some of the goods. They can get them more customized to taste of the Bangladesh market, but they have a workflow going here. Whereas on the buyer side, they don't have the brand pull. So that is an entry barrier for them, and they would have to spend money on advertisement, promotion, etc., to get the brand recall from the buyer's standpoint. The other thing is the existing rivalry, which is there between the existing competition, which is there. Now, we discussed that there are four players which are there in the market. These four players are competing with each other already, but at the same time, do they have the wherewithal of dealing with the Daily Mart 99? Maybe not, because their combined revenues are only 23 crores as compared to Daily Mart single alone. Their revenues and profits in excess of their overall revenues. So from that perspective, Daily Mart is in a better position. Now, the other thing is that which is threat of new entries, which is a new entrant, which I spoke about to some extent, which is about brand and a substantial amount of capital needed, which is again supported in case of Daily Mart. Now, the only thing which is left is threat of a substitute product. Let me go back here. to the another angle which is there in the case study. Essentially, if you were to choose that you want to go to DIY or Miniso, what are your substitutes? Your substitutes are going to be the supermarkets or the general stores which are there, the mom and pop stores which are there, right? So the same situation prevails in case of Bangladesh as well. And there is a good presence of traditional and large grocery stores which are there. So the largest grocery store is having a turnover of about 9 crores. These supermarkets, the way their format is working in Bangladesh is that they are now trying to shift to outside locations of the main cities because they are able to offer them big spaces, and there is easier logistics and easier parking space available, which kind of makes shopping more comfortable. They are able to sell both ambient and non-ambient goods, and there is no fixed price model. When you go enter into a supermarket, you are able to see competing products. You are able to get branded products. Other advantage you have is this. What Daily Mart is thinking is that they maybe it's actually good for them. Supermarkets are present in the main cities, the big cities. These 99 stores are actually present in certain cities which are maybe outside or tier 2, tier 3 cities. So they can focus on mid-tier towns, and which can actually open a new avenue for them, basically, uh, because that's a wide space. So coming back to the case study, so in a way that was the threat which you have from the supermarkets, and the strengths of Daily Mart 99 is something which will be able to counter the threat which is there from the substitute which is there from the supermarket standpoint. So I'll pause here because that was the first gist of it, talking about Bangladesh entry of uh, the Daily Mart 99. So I'll pause here for a minute, and in case somebody has a question, I'm happy to take that. Just checking. Does somebody have a question? Okay. So then we will move on. We will move to the next section of the case study, which is now in relation to. So this is one. Yes, I have a question. Just well, it's a good question, and I will. So my experience is both in consumer industry and auto industry. And I'll maybe take an example of auto industry to explain the question which has come. So I'll read out the question for everybody's reference. The question is, since these kind of businesses are kind of exploit suppliers, how sustainable it is basically from a supplier standpoint? So see, what happens is that these suppliers, they also continue to work with the people like Daily Mart 99 on a long-term basis, right? And often there will be new products and new items which will continue to be introduced by Daily Mart 99 or by the auto manufacturers, to combine the auto example as well. So in the initial period, you make more margin on the initial supplies. And as the old products which you have been supplying for ages, you also figure out as a supplier ways and means of manufacturing those products at the least price point, basically. So you also become more and more efficient, and your all fixed costs get absorbed over a period of time. So you are also able to deliver those at a lower price. Generally, that's how it works. Okay. Let me move on to the next question. So the next question, which everybody has in their case studies. Sorry, I have one more question. Let me just take that as well. So essentially, Samethan, thanks for the question. His question is, I'll read out for everybody. If non-moving items are held in the stores, how to tackle such items? So essentially, what happens is that the company uses several methods of liquidating these products, which are non-moving at all. Obviously, we all are aware that sale is one of the ways to kind of liquidate these products or tag along these as free items along with some other products. That is the way to kind of liquidate in a daily mart 99 kind of a situation. And the last is that if they are really unable to sell something, then it just goes like a scrap, basically. So the way people will do it, that they have a very tight leash on inventory. They will formulate a inventory movement valuation policy, which will be 6 months, 9 months, and 12 months, and they will make provision on a staggered basis, and then keep monitoring them on a very regular basis. Also, another thing to look at is that what happens is that these retail stores, they will not place orders for a very, very high number of inventory at the beginning, because they are also testing the consumer taste. So unless they know that this product is really going to sell, they will order. Their order levels are pretty rationalized. That is also another thing which they ensure. Yeah. Okay. So I'll move on to the question number 7 in your case study, which is, so I'll read the question and then I'll put the context back to the case study. This is basically the MD at a Daily Mart is, so essentially what's happening is that the CFO of the organization, he is of the view that McKinsey 7S system should be put in place, the framework should be put in place, and he's having this discussion with the MD and the CEO. And there are certain contentions which the MD has. There are certain things which the CEO has. Let me just go to the relevant slide and then I'll explain to you what this is about. Yeah. Yeah. Okay. So as you can see on your screen, that this is the McKinsey 7S framework. There is a dotted line in between. Above the dotted line, it is hard S, and the soft S below the dotted line. What it means is that there are certain hard elements and there are certain softer elements. Essentially, the hard elements are those elements where, due to the business decisions taken by the senior management of the company, you can change those things. For example, strategy. So you can change the strategy that you want to enter this geography. You want to keep your pricing at a such a set point. These are decisions which you can take. Structure. So you can change the organizational structure. You can change your pricing structure. You can change your inventory management structure. So these are hard decisions. Systems are basically the SOPs, the IT systems which you use, and several other systems which you install. So again, you can take a business decision and change some of these things. So these are while they may require some bit of risk taking, capital, etc., but once the decisions are taken, these are easier to implement. The other thing is basically softer elements, which generally deals with the people of the organization, revolving around skill set of the people, the culture, the value system which prevails in the organization, and the style, basically the leadership style. Now, maybe let me just give an example here to just put this into context. For example, Air India, right? We all are aware that Air India was a government organization, and the government was trying to get rid of Air India for a fairly long period of time. They sold it off to Tata several years back, maybe 3, 4 years back, right? And Tata is a private organization, right? Now, some of the decisions are purely hard decisions which Tata had to take, that they need to merge their existing airline Vistara with Air India. This is a hard decision, the business decision, strategic decision. They've taken it, moved on with it. While there are other cultural, behavioral uh, changes which they need to bring about. These are going to take place over a period of time, right? So those are the softer changes which I'm talking about. So with this context in mind, now Daily Mart 99 is already a established organization in India. The CFO of the organization is presenting this framework to the CEO and the MD, which is who is an engineer by profession. So the CEO of the organization, he has a few application related challenges. What he's saying is that he likes the idea. He wants to make sure that there is a measurement available of these 7 areas. There should be KPIs linked. And he's more concerned about that whether these softer elements will get implemented properly or not. And ultimately, since he's the CEO, his main focus is that ultimately it should continue to result into higher profits, higher margins, and high volume. So the CFO has shared a solution which is about that what they need to do is that they need to do a diagnostic of where do they stand today, map their current state versus the desired state, develop a balanced scorecard, KPIs of the people involved, and then integrate the systems and skills. So that's something which the CFO is proposing. On the other hand, the MD, who is more responsible for the day-to-day operations, he has a little different thought process. He is more focused, I'll not go into a specific point, but he's more focused in the case study, as you will read it, on the hard elements, because he thinks that the hard elements, once implemented, will do the trick for the business, basically. So again, from that perspective, the CFO explains that all 7 elements are complementary to the lean model which Daily 99 has, and systems and skills can go hand in hand. Basically, the automation can take place and people capabilities can be scaled up, and the framework will promote agility and scalable operations, essentially. So that's the way forward, which is there in the case study, but I'll not delve into it too much. So this is another business situation which Daily Mart 99 currently is. So we've spoken about 2 situations. One, the management is evaluating that they want to enter a new market. Second, at the same time, they're trying to put in a new framework of management in the legal entity. I'll pause here again. And if somebody has any questions, then I'll take those questions. Okay, then I'll move on. I'll take the third question. Yeah, somebody has a question. Operational tools, e.g. I'm not sure if I'm getting your question, Pitambar. Maybe you want to. I'm not actually getting your question about operational tools. Maybe if you want to elaborate a little bit, what do you want to ask? Okay. So essentially, what it means is, so I'll repeat the question for everybody's benefit. On your screen, it says conclusion is 7S is not a replacement for operational tools. It enhances integration, strategic clarity, and workforce alignment. So what it means is that 7S is like a strategic tool which is there, which you need to implement at a strategy level. Whereas the way your day-to-day business runs, the way your supply chain works, the way you negotiate with your vendors, the way you set your prices for the consumer, the way you organize your shelves on a daily basis, all that remains same. This is something which is more at a strategic level, that you want to implement that framework so that there is higher level of integration, strategic clarity, and workforce alignment to your larger goals and desired results, basically. Okay, then I'll move on to the last descriptive question, and then post that descriptive question, we'll maybe take a pause for 10 minutes. Yeah. Okay. Let me present the question to you. So, if any of you might have read the case study, you would have seen, which is question 8, which talks about a revenue transaction between Daily Mart and Max Retail, and how do we recognize revenue for this transaction under the accounting standard index 115. Let me just explain the transaction first, and then we'll discuss that. Just a second. Okay. So the transaction is that Daily Mart is selling certain goods to Max Retail at a price of 1,21,000 rupees with a credit period of 24 months. And here, this is the product being sold is a new product, and there is a 90-day sale return period, which is there. The question in this situation is that, okay, at what value do we recognize revenue, right? And what point in time do we recognize revenue? That is the question which we need to answer. So if you look at the screen, here, control is transferred to Max Retail at the contract inception. Hence, Daily Mart has fulfilled the performance obligation. So basically, they've handed over the goods to Max Retail. But revenue cannot be recognized due to uncertainty over returns because it is a new product. Since it's a new product, we do not know the quantum of returns which will come back. There is no past history available. That is why the company Daily Mart will not be able to recognize any revenue until 90 days have passed, because there is no sufficient data available to make a reliable estimate. Is this accounting concept? I hope it is clear to everyone. The other concept is that, as I said, the price is 1,21,000, while the credit period available is 24 months. So the standard says that if you have credit period of more than 12 months, then in that case, this may involve significant financing component. Since it involves significant financing component, the financing portion of it, which is the interest portion, which is an interest income, so you'll segregate the base price of the product and the financing component, and you will recognize the financing component over the period of the credit period, which has been given. So in this case, 1 lakh is the cash selling price, 21,000 is the financing component. So 21,000 will be recognized over a period of 24 months, whereas 1 lakh will get recognized on the 91st day when the sale return period is over. Does anyone have any question on this? I'll take that question then. Does anyone have any question? Okay.
Sir, since in this case there is a cash selling price available, so we are able to get the interest component of this transaction. Suppose like in this kind of business, Suppose there is a significant financing component is evident from the fact that it's payable after 2 years' time.
Right.
So if we do not have readily available cash selling price, then in such situation, how would we deal this? Like, how would we bifurcate the components?
So it's a very good question. And often this is the situation which we are actually faced with, basically. See, essentially, here in this case, you would have to arrive at a fair value of the goods which you have sold. And the standard prescribe several methods of arriving at the fair value. And one of the method of arriving at the fair value could be that you use the gross margin which you generally make on sale of goods and apply that gross margin on top of the cost which you have incurred in manufacturing this product. So that could be one example of doing it. And there could be other ways of determining the fair value. For example, the product which you are selling as of now, there a similar product available in the market, and at what price is the another seller, which is independent price, which is available at which it is selling. So then you will have to determine a fair value using the options available to you in that situation. And also another thing is that you will have to look at that what is the borrowing rate which is available in the market, basically. So and you can then use that to discount the selling price at which you have sold the products. That could be another way of arriving at this situation. Yeah.
Okay, sir.
Yeah. Okay. So, Deepak ji, we'll pause here for a while, maybe 10 minutes, and
Yeah,
then
yes, sir. Yes, sir. Yes, sir. Yes, sir.
all right. Okay, let's start again at 7:30 maybe, or maybe 7:35. 7:35. Okay.
Okay, sir. Yes, sir.
Okay.
Yes, sir.
Yeah. Okay. Thank you so much. Okay, we will start with the remaining section. Now, thank you so much, everyone, for the questions. So now what we will do is we will dive into few specific questions, and then we will understand the context of them and the relevance of them from the business standpoint, which is there. So the one of the things which correct. Let's just first read this question, and then I'll tell you the context of it. So there's one question which is around certain machines which Daily Mart is planning to buy. That what is the accessible value of these machines? This is a question more from the customs standpoint, which is there. Now, so Daily Mart 99, as we have been discussing, operates on a lean model, and they need to ensure that they're continuously investing into automation. So with that in mind, what they have done is they are now investing into certain machines which they're importing from Japan, and these machines are pretty costly from their perspective. Let me just go to the relevant slide. Yeah. Right. So Daily Mart 19 is importing 4 advanced machines from Japan. And as you can imagine, the operations of Daily Mart 19 would entail that they need to refill their shelves very quickly because they need to replenish the shelves which are there. So for that purposes, since there are several SKUs, maybe there are more than 1,000 SKUs they need to continuously keep printing the labels of the products, unpack the bundle packing which they've got from their suppliers and make them single units and pack them, and then place them on the shelves. All of this is a manual process, right? Now, to help them with this entire thing, they have decided to automate it, and they are importing certain machines to help them do printing, labeling, and packaging. And these are state-of-art machines which are there. And obviously, this will help them in terms of improving their efficiency, reducing wastages, and things like that. This is the cost structure of the machines. So raw materials are of 1,500 rupees, processing charges are 300, import-related expenses are 90, profit margin of the seller is 150, transportation is 60. Currently, we do not know the insurance value. So the question which we had for ourselves was that what is the accessible value under customs? Question number 1. So the options are there in front of you, which is 4 options. These are multiple choice questions. I would request anyone, if someone can share what the answer would be, and then we can discuss the solution. Is anyone able to figure out? I'll go back to the cost structure for ready reference. Yeah. These figures, 2,100 is in thousands yen. Is anyone able to figure out that what should be the cost structure? Okay, maybe for the interest of time, I'll move on and I'll maybe share the cost structure. So essentially, from a accessible value standpoint, 1,500, processing charges 300, import related expenses, and profit margin. These are your base price of the product which is there. So if you will total this, you will get to a value of 2040 essentially. So the customs rule, which is their rule 8, read with Rule 3 and Rule 10 of the Customs Valuation Rules of 2007. They require that if you do not have the insurance value readily available, in that case, you can consider the insurance value at 1.125% of the base value of the product. So this would be 1.125% of 2040 will amount to 22.95, basically 22.95 in terms of thousands. So then if we will add 2040 plus 60, which is transportation charges, and the insurance value which we have now arrived at, which is 22.95, the total will come to 2100 plus 22.95, which is 21295. Or if you were to read it other than thousands, it will be 2122950. So that will be the assessable value from a customs standpoint. If anyone has any question here, then I will I can pause for a minute and then we can move.
So just because not went through custom yet, so does assessable value for charging custom duty includes the transportation charges to destination? Destination, is it meant by the buyer's place or India?
So, sorry, your question is on the custom duty value, or your question is on
whether transportation charges to be included in the assessable value for charging custom duty? The
Yes.
transportation charge is destination, up to
Yes.
destination.
Yes. So rupees.
Sir, I have one more question also. When there is a loading and unloading charges is not provided, in that case also we need to consider 1% on that, right? Here the loading is not talk about loading and unloading charges also, and in addition to the insurance.
See, I would assume that this header here, which is other import related expenses, that includes those loading and unloading charges, basically. And it has been considered for the purpose of calculating the insurance, basically.
And the transportation also, whether it is in the vessel or the air, if it is a air means then we need to restrict to the 20% of the value. That
Right.
information also is not provided on this.
Correct. You are right. You are absolutely right.
Sir, it means that the transportation charges, we should mention in our note that we take it as a road transport or ship transport.
You should, I guess you will have to mention both. You will have to mention basically, because what you are saying is from the seller's factory to the destination, which is the warehouse of Daily Mart in this case. So you will have to mention both. So I would again assume that because it says destination, so it should be end destination, which is the warehouse. So you'll have to include both. Yeah.
Sir, I think the freight charges is allowed up to the
20%.
Up to the port, not to the warehouse of that 99 acre.
So this information, because it's not readily available, maybe I'll seek Deepak ji's help in terms of the case study on this.
Yeah, we could not see all this information on here. That's what how to answer these questions is petty ambiguity, so that we go to give lot of assumption for that.
Friends, if you have any specific technical query, you can write to us ibs-final@ICAI.in. We will surely respond to you.
Yeah, fine, sir. The discussion is really good, sir. We really appreciate it. Thank you so much.
Thank you. No, thank you. It's a very relevant question and very intriguing. And as Deepak ji said, that you can send them the queries separately, and they can help you answer the more appropriately. Yeah. Okay. we will move to the next multi-choice question, which is there in the case study. This question is an interesting question, and I think the way the case study explains the question, also the answer which is there is very nicely done. Basically, here, like I mentioned, that initially they are buying almonds from USA. So there is a situation that they need to make payment of $10,000 in the 90 days to the almond supplier in the USA in US dollars. So and the Daily Mart 99 is looking at hedging the foreign currency risk which is there. So how much money should Daily Mart 99 spend now for the $10,000 which it needs? Essentially, that's the question. So let me again go back and just put the values in the presentation which is there. So from the context standpoint, yeah, just a second. Okay. So on your screen are the facts related to the question which was there. So $10,000 which are due in 3 months. The current spot rate bid rate is 85.7812, and the ask rate is 85.9345. The prevailing borrowing rate in India is 8%, and in US it is 4%, and deposit it is 6%, and US it is 3.2%. So the ask is that there is a payment required by Daily Mart 99 in foreign currency, and there is an exposure to the exchange rate which is there post 3 months, and there is a weakening rupee, increasing cost in terms of INR. So considering this situation, the Daily Mart is considering hedging. So does anyone want to take a chance on this question which is there? It provides 4 possible answers that Daily Mart will have to pay the amount at the end of 3 months. Anybody wants to take a chance in answering this question?
So what is the US dollar deposit rate?
US dollar deposit rate is 4%. Sorry, 3.2%. So 90 days we are discussing, so 3.2% will be 0.8%, basically. Does anybody want to take a chance of answering the question? Okay, let me try to demystify and explain this for everybody's reference. Yeah, I've got one answer which is C, and since I've got one answer, it may be useful for to hear, if possible, from Saminathan to that how did he arrive at this answer. Maybe for everybody's context, it will be easier. Do you want to attempt that? Saminathan, do you want to attempt it? Okay, maybe I'll explain this for everybody's reference. So essentially, here Daily Mart needs to shell out $10,000 at the end of 3 months, and they also want to hedge themselves against the currency movement. Right now, the current spot rate is 85.7812 if they were to sell, and if they were to buy dollars is 85.9345. All right. So with this rate, what they will have to do is they will have to buy dollars at this rate today. All right. So first they need to calculate that there is a 0.8% which is per quarter, which is the deposit rate. So that means if they were to deposit dollars in a bank, in a US bank today, how many dollars do they need to deposit to get $10,000 at the end of 3 months, right? So there will be a back calculation done. $10,000, if you were to discount it by 0.8 for 3 months, you will get a value of $9,921. So essentially today, I should deposit $9,921 to the bank at the rate of 3.2% annually to get $10,000. Now to get $9,921, I will have to buy them at this rate because the sellers will sell at a higher rate. So I will have to buy them at this rate. So I will buy at this rate, which is this one. And then I will have to borrow the money to buy these dollars at the rate of 8%, basically, because my borrowing rate is 8%. So I will have to then borrow the amount which is 9921 multiplied by the sell rate. So that is the money which I need to borrow to be able to buy these dollars. That amount will come to 852,556. And that money I'm borrowing at 8% rate. So 8%, that means that I'm borrowing it, I will be paying 2% rate of interest for 90 days. So if I'll do the math, that math will come to 869,607, which is option C, which somebody said in the beginning. I'll just present the solution also for everybody to absorb it. It's a small solution, which is there. So 869,607. What is important to understand is the concept of hedging, which is involved here. And yeah. Does somebody have anybody has a question on this? Okay. All right. So maybe I'll just share a little on this one, because this is a very important concept, hedging, and you will find hedging being applied in various situations, which is there are lots of software companies which you see, which is TCS, Infosys, many other Excel Tech, who are export-oriented companies. Since their debtors are all in the foreign currencies, they typically end up hedging their debtors. There are some companies which are import heavy, and they buy a lot of products from outside for manufacturing them here. So in that case, they do a lot of hedging on the import side. So for example, Maruti, for example, Indian Oil, they would buy oil in foreign currency, and oil itself is a commodity. So they will use hedging. The way this exercise explains the concept is that what is hedging? Hedging is essentially the function of the prevailing interest rates on currency in the relevant market, basically. So ultimately, the differential of the interest rate is what is going to determine what the currency rate is going to be in that market at the end of the tenure. That is the fundamental concept behind the foreign currency price movements. And that is how the hedging works, basically. So ideally speaking, you should land up into a very similar type of range, barring the borrowing cost difference, basically, between the two markets. Okay, I will move on to the next question. And yeah. Okay. So the next question for in the case study is around the rate which needs to be used for determining the assessable value for the 4 Japanese machines which the company is buying. And if you would recall, I had earlier shown that there was a slide on the rate at which these machines were being imported. I will just present this slide again for everybody's reference, and it's an easy question. Maybe if somebody is able to answer this. So this is the chart which you have. So there is an RBI rate which is 56.75 on the date of bill of entry, CBIC rate of 57.05, and there is a date of arrival rate which is 55.20 and 55.50 for CBIC. So can anybody answer that which rate will be used for determining the assessable value?
Sir, we will use always the CBIC rate on the date of filing the bill of entry.
Absolutely. That's absolutely the correct answer. And since you answered it so emphatically, can I also ask you to describe why is that the case?
So this is what mentioned in that act, sir.
The Customs Act, right?
Yeah, this is what mentioned in the Custom Act, that the type of duty and levy of duty, that section, it is mentioned on it.
Perfect. Absolutely right.
But when there is no CBIC rate, then we can refer the RBI rate, I believe.
Right.
I think in the options of CBIC.
Right. So I won't comment on that one because that's something which is again very detailed in terms of the going into the rules, etc. But I think for your reference and for the group here reference standpoint, let's refer to the date of filing of bill of entry rate by CBIC, which is defined in section 46 of the Customs Act. And CBIC is supposed to publish these rates 2 times in a month. So they are available on the website of ICAI. And these can be used for the purpose of the computation of bill of entry.
Yes. Sir, at the same time, the determining the rate of duty, that the date will be different than this. Then the goods ended for taken for the home consumption, then we have to consider date of presentation of the bill of entry or inward of the vessel's arrival, whichever is later. That date we have to consider for determining the rate of duty. I'm talking about rate of duty. There are 2 things we will consider. One is for exchange rate. Exchange rate, this is very clear. For determining the excess duty, that custom duty. On the custom duty determination, we will consider the presentation of bill of entry or the aircraft or vessel arrival date, whichever is later. On that date, we will consider for determining the rate of duty. Basic custom duty I'm talking about.
Oh, understood. So you are saying essentially if there is a change which takes place in the rate of the customs duty between the date of arrival and the date of filing of bill of entry, so whichever is presented earlier, that is the rate which you are saying, basically. Typically, this situation will arrive when there is a change in the rate of duty, right?
Yes, sir.
Right. No, fair enough. So customs is not my subject, but I would go by what you are sharing here in the group, and maybe Deepak ji can also add on because it is very specific. So I just want to make sure that that it is correct for the larger group. Yeah. Okay. All right. Let me move on to the next question. Okay. Now this question is also very interesting, and this question is about the directors. All right. For Daily Mart 99, and in recent times there has been certain change in directors in terms of there is an additional director which has got appointed, Ambika, and there is an alternate director which has got appointed because one of the directors had to travel overseas. So the question is that that there are 2 statements made here, that the alternate director, which is Mr. Dunn, he should hold office till conclusion of 22nd AGM, and Ambika should hold office, which is the additional director, should hold office till the AGM. We'll come back to the question again. Let me just go to the facts first so that we understand the facts, and then we'll come here. Yeah. Okay. So the facts of the case are that Ms. Ambika is an additional director. She was appointed for governance and oversight. Mr. Dehra, who is a director, he took a 6-month short-term executive course overseas, so he went abroad. In his place, Mr. Dunn has been appointed as an alternate director. So Mr. Dehra has returned. The events which have taken place is that Mr. Dehra, who had earlier gone on leave, he has returned after completing his course, and he is due to retire at the 22nd AGM. And tenure of Mr. Dunn ceases automatically as per Dehra's return, as per Section 161(2). Now, with these facts in mind, going back to the question is that there are two statements made here. Mr. Dunn, who was the alternate director, and Ms. Ambika, who was the additional director, shall hold office till the upcoming AGM. So what we need to answer is that which of these statements are correct. So there are 4 options here. Anyone who wants to share the perspective or the answer which they think and the reason behind that would be very helpful. Does anyone want to attempt this?
Option B, sir.
Option B. Okay, and why do you say so? So, okay, maybe I'll just elaborate on this. So, going back to the slides. So here,
generally the thing is that the additional alternate director can hold the office within which the person is he is in outside there, but once he is in, he has to vacate his office. Absolutely. That is a general provision. And also in terms of that this thing, the next immediate meeting or 3 months, whichever is earlier, he has to do that.
Absolutely.
That is a provision is provided.
Absolutely. So thanks for sharing that. So essentially, Section 161(2) of the Companies Act says that if the original director has returned, then the alternate director ceases to his office. So in this case, Mr. Dehra would retain his office and then he will retire in the upcoming AGM. And as far as Ms. Ambika is concerned, as Section 161(1) governs the provision, which says that an additional director should hold office till the upcoming AGM or the last date to hold the AGM, which is there. So in this case also, Ms. Ambika will have to demit the office in the upcoming AGM, basically. So that's why statement 2 is correct and statement 1 was incorrect. Thank you so much. Thank you. Okay, let me move to the last question of the multiple choice question which is there. And then maybe after that, we can just have a general sharing. This question, let me just first share the facts and then we'll come to this question. Okay. Okay, so the managing director, which is Mr. Krishnan, whom we spoke about earlier, he had certain issues with the McKinsey 7S. So there is a FEMA violation and penalty with respect to him regarding executing of certain foreign exchange transactions beyond the permissible limits. So in this case, FEMA Act applies. Now the question is that in this case, whether the adjudicating authority may by order in writing authorize an officer of enforcement not below the rank of assistant director. I can just go to the slide also actually. Sorry for that. So as you can see it on your screens, there is an adjudicating authority who can take an action by order and enforce the law and recover the arrears of penalty. Second option is that order of recovery shall be issued if the person upon whom the penalty is imposed failed to make full payment within a period of 60 days from the date on which the notice of payment was served on him. And third option is such authorized officer of enforcement has all the like power which are conferred on the land revenue collector. Now, there are 4 options available here. We have to select the option which is incorrect. So here it's a different question. Here it says incorrect. So the options which are incorrect out of the 3 options. So that is what we need to answer out of A, B, C, D. Anyone wants to attempt this?
Sir, here the option 2, point number 2 and 3 is incorrect. See, I mean the option number D is correct. The reason we had this issue also, sir. I was working in one of the company. The FEMA was applicable. In that case, they collected the revenue like anything. They put the attachment also. They passed so many things. The equivalent amount they passed, that guarantee, all these things they put in place. Here they can within 90 days they have to recover their money. Even as per the income tax proceeding, as how if the payment is not done, they can attach the bank account as well.
Absolutely.
Yeah, in my case, that attach the bank account, they freeze the amount. We are unable to withdraw the money as well.
Absolutely.
So option number D is the correct in this case.
Absolutely. That's the right answer, and you're absolutely right. You've given the logic as well, which is 90 days, and it's not the land revenue; it is the income tax rules which apply here. You're absolutely right. So with this, I think we have covered all the multiple choice questions which we had and the descriptive questions which we had in the case study. I think all the aspects of the case study have also been covered. Deepakji, if you want to say anything that which is missed out from the case study standpoint, and then maybe I can share about a few other things.
Sir, it is fine. Please go ahead.
Okay. All right. Thank you. So maybe for everyone, since Deepakji requested, and from a practical standpoint, I thought that I can mention a few other things which may be relevant to you. So see, we discussed about retail and consumer industry today. And if you want to get more knowledge about how retail and consumer industry works, these days the information is pretty easily available. And what you can do is that you can focus on certain companies which are operating in different market segments. For example, there are companies like V-Mart, D-Mart. There are other retail companies which is
Reliance Fresh.
Yeah, right. So you can both go through their annual reports, and also on a quarterly basis, these companies organize very useful investor calls. And if you will listen to their investor calls, you will get a very good insight into how the market actually operates and what are the key business issues which they're actually facing. These investor calls are generally 50 minutes to 60 minutes, and there is a commentary given by the management, and then there are questions and answers done by the investors. So it's a very useful way of understanding how the business work and it's shaping up, and also there is a discussion on the industry also generally. So I think that is one thing which I wanted to add. Second thing which I wanted to add about was some of my friends here, they may be auditing, etc. And one of the areas which we tackle on a very often basis is going concern. So going concern is something which is very common issue which you face again in several industries due to several reasons. Maybe I'll just elaborate on certain things which you need to focus on when you are evaluating going concern. See, going concern as a concept, maybe we don't understand it well enough. Essentially, what it is about is that the cash which you need to survive in the business in the coming 12 months. So that is what it is about, essentially. Assuming that you have a running business in hand. So have you tied out the resources which you need for the purpose of running the business? So when you're doing your audits, what you should ask your business management is that they need to provide you a cash flow projection. What is their banking arrangements which they have for the working capital, for long-term capex which they are doing? How are they going to fund it? Is there a committed shareholder funds which are available to run the business, which are there? Absolutely, SA 570, and there is an implementation guide also available for going concern. It's a very elaborated guide which is there. It provides a Q&A and the draft reporting examples also in several situations. And there are certain indicators of going concern issues which are there, which you should focus on. If your company has made a loss during the year, right? If there is a loss, that may be a trigger. If the current liabilities exceed your current assets, that may be a trigger. If you have a net worth which is negative, there is a trigger. If the company was not able to pay their debts on time, right, there may be a trigger, right? If
negative cash flow ratios are very negatives.
Absolutely. All these are triggers. What is important is that when these triggers are identified, you ask some tough questions to the management about their funding arrangements to run the business in the coming 12 months. And then appropriately evaluate that how will you report this, or whether at all will you report this in your audit report. I think that is one area which is worth studying, and it's an interesting area with very, very live examples available in the market. So that's one area. The other thing which I wanted to share is about the fraud-related issues, and maybe a few examples also I can provide. See, one of the as you know that the fraud-related reporting landscape in India starts and ends with. So there is in the main audit report there is a requirement of 143.12. SA 240 is the auditing standard which governs it. Absolutely right. So if I start from the audit report, it talks about 143.12, which is prescribes a limit of 1 crore, beyond which there is a reporting requirement to the central government, and there is an AFRA circular also around that. I'll not dwell into technicalities. That is one. Second is the CARO report, which talks about whistleblower complaints which have been received by the company during the year, and whether any of the matters resulted into ADT4 filing, whether there was a fraud done on the company, by the officers or vendors of the company, things like that which need to be reported and considered. These are pretty complicated, very, very complicated areas. And if you encounter, then you need to be mindful of the fact that have you been able to uncover, or the management has been able to uncover the full depth of it. So I will just kind of share, for example, few things which happen on a very frequent basis. All of us would have seen in organization that there is a payment system, right? You need to make payment to the employees. You need to make payment to your vendors, right? So how is it done? You send a Excel sheet, or you send a signed hard copy sheet to the bank saying that please make the payment to so many people in one go, 10 people, 20 people, hundreds of them. Many instances are noticed where the person responsible for preparing this payment advice, he changes the bank account numbers, and he puts his own bank account number or the relative's bank account numbers, and the remittance actually goes to his own account or the relatives. And it is realized after many months, when the vendor complains that I've not been getting the payment, by that time the employee is already run away. This is one way, which is very, very common these days. The other, this is purely about cash, where the employee is embezzling cash out of the company. The other is financial reporting related matters, where the senior management of the company, they come under tremendous pressure from their stakeholders or from the market, and under that pressure, they start certain misreporting of sales and things like that. That also happens. Misappropriation of asset and cash. I took an example of that earlier. So what I'm trying to say is that the people who are behind perpetrating such instances, they've carefully thought about it, right? And they have been doing it for a while, right? So as an auditor, you need to then determine the timing, that it has been happening for how much time, which are the people involved, what are the controls which have failed, right? You have to just focus on these things, and they take long time, basically, to kind of ascertain. So in this situation, just step back, ask the management to carry out a detailed investigation, and then you have a review of the investigation which has been carried out, and then accordingly form your view of how to report these matters in both CARO, in your main audit report, and whether at all there is an impact on controls, which is there. And more often than not, there may be a violation of laws and regulations also, which might have taken place because of these frauds which have taken place. Yeah. So that is another thing which I thought as a practical insight I might to share. So going concern, CARO, which we deal with on a regular basis. And the other thing is, I think the last one which I want to share is about related party transactions. Related party transactions is something which is very, very in focus these days. SEBI, through their LODR, has recently come out with the minimum information standards which are required to be used for the purpose of placing the information in front of the audit committee and the board, which is there. These are industry standards which have been rolled out by CII, FICCI together, and these are mandatory to be complied with from 1st of July. This 1st of July. The essence of the standards is on compiling information to determine whether the transactions being carried out by with related party are at arm's length or not. So that is another complicated area for the auditors and for the management both, to determine that whether the transactions are actually being carried out at the right value, and it's quite a complicated exercise, which is there. Yeah, so I think these are a few examples I thought I may share, and happy to take any questions if anyone has, either about the case study or any other aspects. I'll try and attempt to answer them. Yeah.
Sir, we have a few descriptive questions asked in the case study. Could you please advise how to write for those, answer for those questions, sir?
So, see, I am from the practical field. Maybe Deepak ji, you would be able to better answer this in terms of how to respond to them in an exam type of a situation.
Students, if you have any query related to case studies, please discuss with sir. Otherwise, I will take the session.
So I'm asking only the question relating to this case study only, the descriptive questions. What is asked in the case study? See, could you please advise related to this case study alone? I'm asking.
So I have one question regarding this going concern concept.
Yes, please.
As taken your point, suppose in practically what as you suggested is to assess the organization capacity to meet its cash requirement for the next 12 months normally. Now, when we go into the definition of going concern, what like it is like the organization is able to continue its operation for the foreseeable future, which I interpret means like some आने वाले कुछ दिनों तक से 2, 3, 4 whether this organization is able to continue as a going concern in the for the foreseeable future. So how this 12-month and foreseeable future is related?
See, you've asked a very good question, so basically what happens is that there are two types of business situations. Okay, one is a business situation which is a situation where you are a profitable business and you're doing well, right? Now, in such a situation, what you assess is that is there something which is going to go wrong in the next 12 months for some reason, because of which the company may not be a going concern. For example, you all might have heard about Adani's short seller report, which came out, and immediately after that, there was a discussion in the market that Vedanta will also default on certain borrowings they have, right? Now, this was a general discussion, but if say in such a situation, if somebody has a big repayment of a borrowing to make, right, while the business is running profitably, right, but there is a big repayment of a borrowing which is coming in, right, that may trigger a situation that how will this person arrange for funds to repay, right? That is where you assess on for something which is like a 12 months, right? Now, when it comes to foreseeables, which means that, say, a situation where your business is not doing well, yeah, right? You are into losses, right? You already have a lot of debt. You are unable to fund the business currently only. That is where the auditing standard requires you to look at period beyond 12 months also. That whether there is an indication that there will be trouble coming even after 12 months. So while you have assessed 12 months is okay, but after 12 months, will there be a problem? So that is when you take a position that you need to highlight that there is a material uncertainty relating to going concern. And generally, these issues are business model type of issues. So basically, the business model of the company is such that there's a problem in the business model, that they will not be able to survive with the current business model due to some reason or the other. Yeah. I hope I've been able to.
Yes, sir.
And also, if the company has an alternative idea to overcome that going concern in place, then there is no issue, right?
Yeah. So see, if the management and the board of the company is able to demonstrate to you satisfactorily that they're going to be going concern, then that's fine. That's absolutely fine.
Sir, just emanating from this discussion, just one thing came in my mind. Suppose there is a going concern question in the auditor's mind. The management demonstrates to him, but he is not satisfied. So now, as per like India's requirement, management will like give the declaration that we have prepared our financial statement complying with the India's. However, the auditor is not satisfied. So now, how will it deal it? Because if the going concern is not there as per auditor, that the financial statement should, the basis of preparation should have changed. So how this situation will be reported? I mean, just
okay. See, the situation which you are talking about, generally these situations are theoretical type of situation.
Yes, theoretical. Yeah, these are theoretical.
That there is a disagreement between the auditor and the auditee. Huh? Typically, that is what happens before you will reach a conclusion, that both the board and the auditors will be able to reconcile that where do they actually stand, right? That if the business situation is such or the cash flow situation is such that it is actually impacting the certainty over continuing the business, then typically the board will also make a note, give a disclosure in the financial statements about the situation which is there, and they will also describe the factors which are leading to that uncertainty in the notes to accounts, And the auditor will accordingly then, if the situation is so bad, then he will probably disclose this as a material uncertainty over going concern paragraph in his audit report, and drawing attention to the board of directors note which is given in the financial.
Sorry to interrupt. My question is, suppose the going concern, as per auditor, the going concern is hit. Okay. Now, if the going concern is hit, the financial statement needs to be prepared on a different basis, liquidation basis or whatever basis. However, the management must have prepared it on the going concern basis. So while qualifying the report, how will the auditor give the impact, like quantum of impact? Because it is a very vague term to know for the auditor. If the financial statement had been prepared on liquidation basis, suppose, then what would have been the just, though it is theoretical, just emanating from.
No, so in this case, see, in this case, if the situation is such, right, keeping your theoretical question ahead, then you will qualify your report and you will state in the report that you are unable to quantify the impact.
Okay, that's what. Sorry, if the going concern is inappropriate and material uncertainty is there, and it is a pervasive nature, then definitely the auditor can qualify the report. The adverse can give the adverse opinion also in this case. As per the SA 706, we can give it.
Absolutely. That's what I said to the other participant, that depending on the situation, how bad it is, then you will take that position of whether you qualify or you give a disclaimer or adverse. But these are pretty theoretical and rare situations which we are talking about, basically. Yeah. Okay. Is there any other question? Happy to.
No, sir.
Okay. Deepak ji, back to you.
Sir, thank you for your clear, insightful, and practice-driven explanation of today's case study on the dynamic and highly competitive value retailing segment, illustrated by formats such as 99 model. Through your expert guidance, we were able to explore the intrinsic strategic, financial, and regulatory challenges that shapes this segment, from pricing psychology and sourcing strategies to the balance between compliance and agility in low margin and high volume operations. Your application of multidisciplinary concepts such as Rule 8, money market hedge techniques, Section 14A of FEMA, Porter's 5 forces, Ind AS 115, as well as practical applications of going concern, offered students a vivid demonstration of how integrated thinking is critical in solving real world business problems in sector like retail and FMCG, where margins are tight and strategy must be sharp. Your session truly reflected the purpose of IBS paper to encourage holistic thinking, strategic evaluation, professional judgment in complex real business environments. We deeply appreciate your time and commitment, especially during a demanding audit season, and thank you for equipping our future chartered accountants with mindset and tools to navigate such dynamic sectors. Sir, thank you once again for your contribution. Students, please go ahead and raise your queries.
Thank you so much, Deepak ji, for inviting me for this session. Thank you so much, and thank you all the students. I'll take your leave now.
Thank you so much, sir.
Thank you so much, sir.
Thank you. Bye.
Students, please go ahead and raise your queries. Before this, there was one query on descriptive question. Okay. To handle descriptive question, read the requirement carefully. Students, read the requirement carefully. If a question asks you to evaluate a firm's supply chain Okay, don't just list facts or give one side answer. You should look at both strengths and weakness, like strong IT system or good relationship with suppliers, and weakness like poor retail chain. You don't need to mention the same number of positives and negatives, but at least give some numbers. Okay, whenever a question says you to evaluate means to give both positives as well as negatives. Okay, but remember, this this principle applicables only on strategic issues. Okay, don't try to apply this on for example AFM. Okay, in AFM you have to evaluate from the financial perspective only. But if you find a strategic question, then you have to evaluate properly by giving proper pros and cons, and simultaneously you have to give proper conclusion. Students, please raise your queries. Yes.
Sir, how to handle that law and FEMA and other stuff, that SPOM, set A and set B, sir?
It's a good question. I sincerely request all of you to take both set A and B seriously. Okay? Set A covers corporate and economic laws. One thing is certain, students, one thing is certain. The Companies Act will apply to almost all companies discussed in the case study. Whether it is a multiple choice question or descriptive one, you are very likely to encounter questions from this area. Okay, in today's environment where corporate failures are increasingly reported, corporate governance becomes highly relevant. Questions based on this topic are generally simple and can be connected easily to any company, any business scenario. Therefore, please don't ignore corporate governance portion. It covers like director's appointment, okay, director sitting fees. Please see your past examination pattern. Okay, if company is listed, you may surely get one or two MCQs from SEBI LODR. Similarly, if a company is having foreign operations, you can expect questions from the FEMA. Therefore, on the basis of past pattern, you may get around 15 to 20 marks questions from this portion. Regarding set B focuses on strategic models. Please note, this paper is multidisciplinary case study with strategic management. Therefore, please don't ignore strategic models. Strategic models covers like McKinsey 7S, Porter's 5 Forces, value chain, supply chain management. In recent examination, there was one question on inbound and outbound supply chain. Okay, it means in past examinations they have tested strategic model, but you don't need to remember. Create a mind map. Create a mind map of these strategic models. Okay. And their application. Their applications are very, very simple. Whenever you go to exam, take your mind map. Try to make mind map or sketch in advance of various strategic models, various standards, various important rules, regulations. It means you, in other words, I can say you can make flow chart or try to write key concepts along with them. You have to just simply apply. Okay. Here, basic understanding is necessary. If you have basic conceptual understanding, I am sure you will clearly this exam. You will clear this exam with good marks. Okay.
Okay, sir. Thank you, sir.
Any other query, students? Now, let us discuss some business models. Okay. Now I am discussing with you business model of Zara. Okay. Zara is not just a fashion brand, but it is a model in itself. Do you know Zara owned by Inditext? Inditext, a Spanish multinational company. This company disrupted the fashion industry with a simple but powerful promise. Which promise? Bring the runway to the retail shelf in under 3 weeks. But how did they do it? Let us break down business model. First is its business model. Fast fashion to scale. Zara follows a vertically integrated model. Unlike other brands that outsource design, manufacturing, distribution, Zara controls almost everything in a house. Zara controls almost everything in house. Design to shelf 15 to 20 days, over 12,000 new designs annually. Please note, over 12,000 new designs annually. Limited runs, artificial scarcity, urgency to buy. It creates dummy urgency to buy due to its limited runs. This model is a blend of just-in-time technique. Regarding its operations, design and prototyping based in Spain. Manufacturing is 50% in nearby area, in nearby Spain. Okay. Distribution, shipments twice a week to store globally. Real-time feedback. Store managers report daily customer preferences to design teams. Now, here, which strategic model we can apply? It's value chain analysis. It's Porter's 5 forces. If I apply value chain, in value chain, there are two types of activities, primary or secondary. In primary activity, inbound logistic. Inbound logistic in case of Zara is tightly controlled. Inbound logistics is tightly controlled. Operations in operations, they have short batch cycles. Outbound logistics, they have centralized distribution centers. Marketing, they have very minimum ad. They have around 0.8% of revenue. Services, rapid change, rapid replenishment. Okay. Financial strategy is high ROI, low inventory risk. Okay. Inventory turnover ratio is very high because they created dummy demand, dummy
How to make notes for the subject?
scarcity. Gross margin is very high. Capex control.
On the portal. Have you got the notes for the first chapter? Yes, ma'am. Did you go through the notes? Yes, ma'am. Was it short? Yes, ma'am. We got short numbers, but
regarding governance and risk management, Zara balances growth and ethics through ESG reporting, sustainability initiatives, and other law compliances. Now, if the company is listed, then they have to comply respective stock exchange laws. Okay. Now, here you have to understand how finance, strategy, and operations are integrated. Analyze how real-time data agility reduce business risk. Appreciate how even fashion needs robust governance framework. As a future professionals, your ability to assess such business models will help organization design systems that are not just profitable but sustainable, agile, and innovative. Students, remember why you started. Remind yourself daily of your purpose, whether it's becoming a CA, making an impact, or making your family proud. This paper is final gateway. Walk through it with conviction. You are not just learning, you are becoming a advisor. The IBS paper is not about rote learning. Students, please note that this paper is not about rote learning. It's about developing the mindset of a CFO, auditor, consultant, strategist, all in one. Every case study brings you on a step closer to becoming the key of professional who adds value beyond numbers. Who add value beyond numbers. Please note beyond numbers. Don't fear the unknown. Use the relevant models, standards, section wherever required. Sometimes exam may be easy, sometimes it may be tough, it may be average, but it is for everyone. Balance practice with perspective. Don't just memorize. Practice how you would respond if you were the finance director. IBS paper rewards applied thinking. Okay. Manage your mind. Take breaks. Stay away from panic talks. Protect your energy. Whether it's Ind AS, SEBI LODR, strategic issues, taxation. Remember, in real life and in IBS, no subject works in isolation. It's how you bring all together that matters. Difficult roads often lead to beautiful destinations. You have come this far, now finish strong. Students, please go ahead and raise your queries.
Sir, your words are really motivating us, sir. Thank you, sir.
Welcome. Any other issue, query, general query?
So,
Sir, how many business models are available, sir?
Uh, like
Sir, your voice is breaking.
Sir, your voice is breaking.
no, sir.
Sir, your voice is not audible, sir. I think you are muted.
Yes. Now sound is proper.
Yes, sir. Very much clear.
Students, there are so many business models like from chapter number 1. If you go through, there is Potter's 5 forces, value chain. After this, supply chain management. If you go to chapter number 5, there are so many models like disruption, McKinsey 7S, balanced scorecard, value for money.
Sir, in which module, sir, you are referring?
It is, I am discussing about set B. There are so many strategic models.
Sir.
Please note that this paper is multidisciplinary case study with strategic management. And since there is no specific or there is no separate module for strategic management, therefore you have to identify strategic models from set B, and at least you should go through the strategic models.
Right, sir. Thank you, sir.
Any other query, students?
Sir, I have a general query.
Yes.
Sir, as I am taking DT classes of May 2025 recorded classes for September attempt, but the last 4 chapters, theoretical chapter classes were not available there.
Please write to us.
Sir, I have already mailed it maybe 10 days earlier, but I have not. मुझे कोई रिप्लाई वापस से आया नहीं. मैंने इवन वहां पर भी बीओस के कॉल भी किया था, तो उन्होंने कहा कि आप मेल कर दीजिए, बट अभी कोई रिप्लाई नहीं आया, और मेरा अभी एग्जाम्स हैं तो वो लास्ट 4 चैप्टर्स।
आपने कौन से ईमेल आईडी पे मेल किया है, बताएंगे मेरे को?
यस सर, जस्ट अ मिनट।
हम्म
सर मुझे मेल आईडी बोली गई थी boslive@ICAI.in।
आप एक काम कर सकते हैं, BOS नोएडा पर ईमेल कर सकते हैं। आई एम राइटिंग इन चैट बॉक्स, BOS नोएडा,
BOS
नोएडा
नोएडा
@
ICAI.in।
हाँ, और IBS फाइनल पे भी कर सकते हैं। मैं इसको फॉरवर्ड कर दूंगा आपकी क्वेरी को।
IBS final
IBS डैश फाइनल @ICAI.in।
ICAI.in dash। ठीक है सर, क्योंकि मुझे कई दिन हो चुके हैं और मेरे ना वो चारों ही चैप्टर हुए नहीं है इसी वजह से, बिकॉज मैंने एक बार भी रीड भी नहीं करे हैं और एग्जाम्स बिल्कुल आ गए हैं सर पे।
हाँ, तो आप कीजिए, नहीं तो हमारे जो है कांटेक्ट नंबर भी वहाँ पर दिए हुए हैं, तो आप डायरेक्ट हमारे से कांटेक्ट भी कर सकते हैं ऑफिस आवर्स में। और फिर जो है जो रिलीवेंट जो पर्सन है वो आपकी क्वेरी जरूर रिजॉल्व करेंगे।
सर मैंने कॉल भी किया था, मेरे पास लैंडलाइन नंबर था 0120 करके था।
आप मेरे नंबर पे कॉल कीजिए, मैं लाइन ट्रांसफर कर दूंगा 0120304593।
0120
30
30
45
45
937। आप
9।
मेरे नंबर पे कर दीजिए।
सर मैंने कॉल किया है, अभी किया है। मैं
नहीं,
इसको ऑफिस आवर में कल कॉल करती
हाँ,
हूँ।
मैं अभी
कल
स्टूडियो
संडे
में
है
तो इसलिए अभी नहीं मैं पिक कर पाऊंगा।
तो कोई बात नहीं सर, मैं इसको फिर मंडे में, क्योंकि कल तो संडे है,
हम्म
मंडे मैं ऑफिस आवर में इसके लिए कॉल कर लेती हूँ।
हम्म। अगर आपका कोई और इशू है IBS से रिलेटेड तो आप मुझसे डिस्कस कर सकते हैं। देखिए, ये पेपर बिल्कुल भी मुश्किल नहीं है, बस एक प्रॉपर प्लानिंग की जरूरत है, प्रॉपर स्ट्रेटेजी की जरूरत है। अगर आप उसके थ्रू जाएंगे और उसके थ्रू करेंगे तो ये पेपर 100% क्लियर होगा और आप स्कोर भी काफी अच्छा करेंगे इसके अंदर।
ओके सर, ओके।
हम्म
सर मेरी एक क्वेरी और है, जैसे अभी मेरा सितंबर अटेम्प्ट है और मैं सेकंड ग्रुप दे रही हूँ,
हम्म
ओके। और मेरी प्लानिंग है कि मैं जनवरी या फिर मई में फर्स्ट ग्रुप दूं, क्योंकि मैंने अभी तक वो टच नहीं किया है, बस थोड़ा सा ऊपर से रीडिंग किया। बट जो लाइव क्लासेस हैं वो अभी स्टार्ट हो चुकी हैं,
हम्म।
कुछ क्लासेस हमारी निकल जाएंगी, तो क्या वो रिकॉर्डेड क्लास लेने में मतलब कोई प्रॉब्लम तो नहीं होगी ना उसके साथ में, कि कोई दिक्कत है स्टार्टिंग की, हम लाइव ना लेकर बाद की लाइव ले रहे हैं तो?
आप ले सकते हैं, लेकिन आपको अमेंडमेंट्स, रिलीवेंट अमेंडमेंट्स आपको देखनी होंगी। जैसे टैक्सेशन के अंदर जो है वो अमेंडमेंट्स आती हैं, स्टेचुरी अपडेट्स आते हैं, तो वो आपको देखनी।
टैक्सेशन का तो सर सेकंड ग्रुप तो मैं अभी दे रही हूँ, मैं फर्स्ट ग्रुप की बात कर रही हूँ।
हाँ,
फर्स्ट
तो
ग्रुप में
फर्स्ट ग्रुप के अंदर भी आपको देखना होगा कि जैसे ऑडिटिंग के अंदर अगर कोई अनाउंसमेंट आई है तो वो आपको देखना होगा। फर्स्ट ग्रुप में तो आपका FR है, उसमें मतलब इतना चेंज नहीं होता, लेकिन फिर भी आपको देखना होगा कि कुछ ऐसा चेंज तो नहीं आ गया है। इसी तरीके से AFM के अंदर तो कुछ ऐसा नहीं होता।
चेंजेस नहीं हो गए या फिर?
हम्म
ठीक
लेकिन
ठीक।
पर लेकिन पर अब आप सेकंड ग्रुप के लिए अगर इसमें जा रहे हैं पेपर के अंदर, तो मैं आपको यही एडवाइस करूंगा कि एटलीस्ट एक सब्जेक्ट को जो है आप अपना फर्स्ट ग्रुप से जरूर स्ट्रॉन्ग कीजिए, और साथ में सेट A और सेट B की एटलीस्ट बेसिक अंडरस्टैंडिंग आपको होनी चाहिए। ठीक है ना? और साथ में जो दूसरे सब्जेक्ट्स हैं उनकी भी बेसिक अंडरस्टैंडिंग होनी चाहिए। अदरवाइज IBS के प्रॉब्लम के पेपर में थोड़ा इशू हो सकता है।
और सर एक जो ये ओपन बुक है, इसका इसका मतलब क्या है? ओपन बुक एग्जाम का मतलब क्या? वहां पर जो ऊपर जो केस स्टडी होती है वो ऊपर हमारे पर मेंशन की जाती है, इसलिए उसको बोला जाता है ओपन बुक, या फिर हम बुक ओपन करके वहां से कुछ रेफरेंस ले
देखिए,
सकते हैं?
मैं हर एक सेशन में स्टूडेंट्स को समझाता हूँ, मैं आपको फिर से समझाता हूँ कि देखिए, ओपन बुक एग्जाम का मतलब ना ये बिल्कुल भी नहीं है कि आपको जो आपके ओपन बुक रिसोर्सेज हैं वहां से ढूंढ ढूंढ के क्वेश्चंस को उनके आंसर लिखने हैं। इसका मतलब ये तो बिल्कुल भी नहीं है। ठीक है?
वही चीज ना सर,
ठीक है।
वही।
अब मैं आपको बता रहा हूँ कैसे नहीं है ये, ठीक है। मैं हमेशा एक ही एग्जांपल देता हूँ, स्टूडेंट्स भी कहेंगे कि सर सिर्फ एक ही एग्जांपल देते हैं। मैं एक इसलिए देता हूँ ताकि वो माइंड में आपके सेट हो जाए, ठीक है। मैं देखिए लास्ट टू लास्ट अटेम्प्ट के अंदर एक फेमा का क्वेश्चन आया था, वो पिछली बार भी मैंने बताया था, और हर सेशन में मैं वही देता हूँ, जानबूझ के ही देता हूँ वो एग्जांपल, ठीक है
जी
ना।
जी।
तो उस क्वेश्चन को अगर आप देखेंगे तो उसमें कुछ कंडीशंस थी, ठीक है। उसमें ईसीबी ईसीबी की एक्सटर्नल कॉमर्शियल बोरिंग, ठीक है। उसमें लोन ईसीबी के थ्रू जो है हमने फंड रेज किया था, ठीक है। किस लिए किया था? कि हम अपने लोन को रिपे कर दें वर्किंग कैपिटल रिक्वायरमेंट के लिए। उसमें 3 या 4 कंडीशंस थी, ठीक है। तो उसमें उसने पूछा था कि इसमें से कौन सा स्टेटमेंट जो है करेक्ट है, ठीक है। अगर आपने उस कॉन्सेप्ट को पढ़ा नहीं है तो सबसे पहले तो आपको ये नहीं पता लगेगा कि वो कौन से सब्जेक्ट का कॉन्सेप्ट है। और अगर पता भी लग गया क्योंकि उसमें एक्सटर्नल कॉमर्शियल बोरोइंग लिखा हुआ है, तो आप फेमा के मॉड्यूल पे जाएंगे। अब फेमा के मॉड्यूल में कौन सा सेक्शन, वहां पे आप जाके फिर आपको ढूंढना पड़ेगा, ठीक है। अब ढूंढ के, अब उसके अंदर जो टेबल बनी हुई है वहां पे अगर आप बुक में जाएंगे तो देखेंगे कि वहां पे इस प्रोविजन से रिलेटेड टेबल बनी हुई है। उस टेबल के अंदर 4 पॉइंट्स हैं। तो अब आपको उसमें ढूंढना पड़ेगा, और जब वो आपने ढूंढा तो पता नहीं वो सही लगाओगे या नहीं लगाओगे। अगर सही लगा भी लिया तो क्या होगा, जितने टाइम में आप ये वर्क करोगे ना, ये प्रैक्टिकल करोगे, उतने टाइम में आपका जो है क्वेश्चन का, दूसरे क्वेश्चन का टाइम आपका निकल जाएगा। उससे आपका प्रेशर क्रिएट होना शुरू होगा, और अल्टीमेटली क्या होगा कि आईबीएस का पेपर छूट जाएगा और जो पोर्शन आता होगा वो भी आप गलत करके आओगे। तो कहने का मतलब ये है कि अगर अगर आपने वो कॉन्सेप्ट को पहले पढ़ा हुआ है, पहले देखा हुआ है, पहले आपको उसकी बेसिक कॉन्सेप्ट का पता है, अंडरस्टैंडिंग है, तो सबसे पहले वो मॉड्यूल का वो पेज जो अभी आप ढूंढ रहे थे कि कौन से सब्जेक्ट में है, फिर वो कौन से मॉड्यूल में है, कौन से पेज पे, आप सीधा खोल लोगे, सीधा ओपन होगा वो पेज। उसके बाद हाँ ये हो सकता है कि वहां पे 10 इयर्स का टाइम लिखा है, 7 इयर्स का भी टाइम लिखा है, हाँ उसमें थोड़ा बहुत कंफ्यूजन हो सकता है क्योंकि आपने एक बार या 2 बार रीडिंग करी है। तो ठीक है ना, उस सिचुएशन में देख लो, ओपन बुक एग्जाम में इसीलिए तो है। ओपन बुक एग्जाम आपको हिंट देने के लिए है, ना कि पूरा का पूरा आंसर उठा के ढूंढ के उसको एनालिसिस करके लिखने के लिए है। यानी कि अगर आपको बेसिक अंडरस्टैंडिंग है तभी आप ओपन बुक रिसोर्स को अप्लाई कर पाओगे, अदरवाइज नहीं कर पाओगे। ये मतलब ये नहीं है कि आपको आंसर ढूंढ ढूंढ के वहां से लिखने हैं, ऐसा बिल्कुल भी नहीं है। तो इसलिए मैं हमेशा स्टूडेंट्स को ये सजेशन करता हूं कि आप बेसिक अंडरस्टैंडिंग के साथ जाएंगे तो भी ये एग्जाम इजीली क्लियर होगा। लेकिन अगर अंडरस्टैंडिंग बेसिक नहीं होगी तो फिर प्रॉब्लम होगी।
सर इसके अंदर आपका कहने का मतलब ये है कि हम लोगों ने अगर बेसिक रीडिंग कर रखी है, और अगर हम सेट, जैसे अभी मेरे केस में सेट ए और सेट बी एप्लीकेबल है, तो वो दोनों मॉड्यूल्स अगर हम लेकर जाते हैं अपने साथ में, और कहीं पर अगर स्टकअप होते हैं और हमें ये याद है कि हाँ ये चीज यहाँ पर लिखी हुई थी, बट ये याद यार पर्टिकुलर प्रोविजन क्या चीज थी, मतलब ये 3 महीने था या 6 महीने था उसका टाइमिंग पीरियड, और वो जस्ट एक रेफरेंस के लिए चाहिए, तो हम उसे ओपन करके देख सकते हैं।
ओपन करके देख भी सकते हो और इजीली अप्लाई भी कर सकते हो, क्योंकि अगर जैसे अब मैं लास्ट क्वेश्चन नंबर 2.6 की मैं बात करूं, 2.6 जो था वो सप्लाई चेन मैनेजमेंट के ऊपर था, ठीक है। इनबाउंड और आउटबाउंड सप्लाई चेन मैनेजमेंट के ऊपर था लास्ट एग्जाम के अंदर क्वेश्चन। तो अगर आपने सेट बी के मॉड्यूल 2 के अंदर से सप्लाई चेन मैनेजमेंट का कॉन्सेप्ट पढ़ा है तो आप वहां एग्जाम के अंदर उसे इजीली कनेक्ट कर लोगे। क्योंकि क्या होगा कि जैसे ही आप केस स्टडी को पढ़ोगे तो आपको समझ आना शुरू हो जाएगा ये कहाँ से आपने, मतलब कहाँ से ये आया है। और फिर मॉड्यूल को खोलोगे तो वहां पे ना उसमें पॉइंट लिखे हैं, ठीक है। जैसे आउटबाउंड सप्लाई के केस में लिखा है कस्टमर रिलेशनशिप मैनेजमेंट के बारे में लिखा है, इंफॉर्मेशन टेक्नोलॉजी के बारे में लिखा है, ब्रांड स्ट्रेटेजी के बारे में लिखा है वहां पे। और इसी तरीके से इनबाउंड के अंदर लिखा है, इनबाउंड सप्लाई चेन मैनेजमेंट में लिखा है सप्लायर्स रिलेशन के बारे में लिखा है, ठीक है। और तो इस तरीके से अब ये मेरे को कैसे समझ आ रहा है, मेरे को इसलिए समझ आ रहा है ना क्योंकि मैंने एक बार तो एटलीस्ट पढ़ा ही है ना, बेसिक अंडरस्टैंडिंग तो मेरे को है ही। तो इसलिए मैं आपको बता पा रहा हूं। तो इसीलिए अगर आपने एक बार कोई चीज देखी होगी ना, तो तो आप एग्जाम में उसको इजीली लगा सकते हो, अप्लाई कर सकते हो। लेकिन अगर आपने पढ़ा ही नहीं है तो फिर वो प्रॉब्लम वाली बात है।
नहीं
तो
सर, मेरी क्वेरी यही थी कि अगर मैंने एक बार रीड किया हुआ, जैसे मैंने मॉड्यूल्स फिनिश किए हैं दोनों, मैं ए भी कर चुकी, बी भी कर चुकी, तो मैं अगर ए और बी सेट अपने साथ आईबीएस के पेपर में लेकर जाती हूँ और कुछ नहीं लेकर जाने देते, तो क्या अगर कोई क्वेश्चन आ रहा है और वो मुझे पता है कि इस टॉपिक में से है और मुझे जस्ट रिकॉल नहीं हो पा रहा कि एक्चुअली प्रोविजन क्या था, तो मैं उसे खोल के एक बार रेफर करके वहां पर आंसर कर सकती हूँ। यही इसका मतलब है ओपन बुक का।
हाँ, इसका मतलब यही है कि अगर कहीं पे आपको कोई प्रोविजन में प्रॉब्लम आ रही है तो आप जरूर रेफर कर सकते हैं। लेकिन जब आपको पता ही नहीं है प्रोविजन, आपको पता ही नहीं है, आपने पहले पढ़ा ही नहीं है, देखा ही नहीं है, तो फिर वो उस केस में तो
वो
फिर वो
हाँ,
क्लियर फेलियर
जब
है।
हमने कुछ पढ़ा ही नहीं होगा, हमें पता ही नहीं होगा, तो फिर हम उसको ओपन करके भी कुछ नहीं कर पाएंगे ना, ढूंढने में
और
टाइम वेस्ट होगा।
आप ये भी देखिए कि जो लो का मॉड्यूल है, सेट ए का जो मॉड्यूल है, वहां से बिल्कुल स्ट्रेट फॉरवर्ड क्वेश्चन आ रहे हैं। स्ट्रेट फॉरवर्ड क्वेश्चन का मतलब क्या है कि अगर आपने कॉन्सेप्ट को ढंग से पढ़ा हुआ है ना, अगर एक बार भी पढ़ा हुआ है ना, तो आप वो एग्जाम में भी अप्लाई कर सकते हो। जैसे डायरेक्टर्स की सेटिंग फीस के ऊपर क्वेश्चन आया, उससे पहले रिलेटेड पार्टी के ऊपर क्वेश्चन आया उससे पिछले अटेम्प्ट के अंदर। लेकिन वो अप्लाई तभी होंगे ना कि अगर आपने पहले पढ़ा हुआ होगा, देखा हुआ होगा। कि कई बार तो क्वेश्चन जो है पीछे टेस्ट और नॉलेज से अडेप्ट होके आ जाते हैं। कई बार क्वेश्चंस जो हैं सीधे आपके मॉड्यूल से अडेप्ट होके आते हैं। अडेप्ट होने का मतलब क्या है कि अगर आपने मॉड्यूल का क्वेश्चन पढ़ा हुआ है तो उसके अंदर थोड़ा सा तो चेंज होगा ना, कुछ थोड़ा सा तो ट्रिकी होगा, लेकिन वो आप अप्लाई कर लोगे। ठीक है ना? तो इसलिए जो है आप एटलीस्ट मॉड्यूल के जो क्वेश्चन आंसर हैं, एग्जाम्पल, इलस्ट्रेशन या टीवाई टेस्ट और नॉलेज के जो क्वेश्चन हैं, एटलीस्ट एक बार जरूर होने चाहिए। चाहे आपका एफआर है और जैसे एएफएम है, एएफएम में जैसे अभी सर ने केस स्टडी के अंदर समझाया आपको फॉरेक्स। ठीक है, तो
जी सर, हेजिंग और फॉरेक्स का।
हेजिंग और फोरेक्स का भी हर बार क्वेश्चन आ रहा है एग्जाम में।
जी जी।
Therefore, hedging and forex chapter is also very relevant for this IBS paper.
Okay, okay sir,
Hmm.
thank you for your guidance,
Hmm.
because I'm giving the attempt after a long gap.
Hmm.
That's why I'm little bit confused regarding the pattern of the exam.
Hmm.
That's why I'm asking again and again कि कोई पेपर देने के लिए हमें अगर कोई चेंज ओवर हुआ है या कुछ स्ट्रेटेजी है वो चेंज हुई है, अगर वो हमें पहले से पता होगी, हम उसके अकॉर्डिंग प्रिपरेशन हो गई है, डीटी हो गई, आईडीटी हो गई, आईबीएस भी ऑलमोस्ट फिनिश ओवर हो गया, बट अब उसका रिवीजन वाला जो पार्ट रहता है, जो कि एक ओवरफ्लो ऊपर से करना है, उसको रिवाइज करके और बस फाइनल अटेम्प्ट के लिए एक बार पेपर देना है। तो आईबीएस एक ऐसा पेपर है जो कि हमारे सारे पेपर्स को कवर करेगा, और उसके लिए मुझे उसकी बेसिक नॉलेज होनी बहुत जरूरी है। अगर मुझे पता होगा तो ही मैं उसको तैयार कर पाऊंगी, नहीं पता होगा तो मैं कैसे करूंगी। वही जस्ट एक क्वेरी थी मेरी कि मुझे कैसे उसके लिए तैयारी करनी है।
अब जैसे लास्ट एग्जाम के अंदर अगर हम बात करें तो इम्पेयरमेंट का क्वेश्चन था। ठीक है, आप देखेंगे तो वो मॉड्यूल के अंदर भी सिमिलर टाइप का इलस्ट्रेशन दिया हुआ है, बिल्कुल सिमिलर टाइप का इलस्ट्रेशन है। तो ये है कि आपको पता तो होना चाहिए ना कि वो कौन सा स्टैंडर्ड लग रहा है को और कौन से चैप्टर में आपको मिलेगा। ठीक है, और मिलने के बाद कई बार क्या होता है कि उसमें थोड़ा सा लिटिल बिट ट्रिकी होता है या
ट्रिकी होता
थोड़ा
है।
सा डिफरेंट तरीके से एप्लीकेशन होता है। लेकिन कम से कम जब पढ़ोगे तो इस तरीके से तो पढ़ो ना कि उसको आप अप्लाई भी कर पाओ ढंग से। ठीक है ना? कभी जरूरी नहीं है कि हर बार क्वेश्चन स्ट्रेट फॉरवर्ड सेम ही आ जाएगा, ऐसा नहीं होगा। लेकिन आएगा ऐसा कि अगर आपने कॉन्सेप्ट पढ़ा है तो आप उसको इजीली कर सकते हो, लेकिन कॉन्फिडेंस बना के जाना पड़ेगा। लेकिन आपके केस में जैसे अब आप सेकंड ग्रुप दे रहे हो और अगर आपने फर्स्ट ग्रुप को अभी तक नहीं देखा है ढंग से, तो मेरी एडवाइस आपको ये रहेगी कि आप उसको जरूर देखें, फर्स्ट ग्रुप के कुछ पेपर्स को।
सर फाइनेंशियल है जो कि मेरा एक कोर पार्ट है, मतलब मेरी एक स्ट्रॉन्ग पॉइंट है। मैं उसको ऊपर से एक बार ओवरव्यू जरूर करके जाऊंगी, क्योंकि मैं उसके अंदर गुड इनफ हूँ,
लेकिन
मेरी
ओवरव्यू
थ्योरी।
का प्लीज प्लीज नोट कीजिए कि ओवरव्यू का मतलब ये नहीं है कि आपने क्या किया कि क्वेश्चंस की ऑडिटिंग कर दी। बच्चे यही करते हैं। अभी 2 या 3 दिन पहले मेरे पास क्वेरी आई, तो उसमें ये बोला गया, स्टूडेंट कहते हैं कि हमारे को कि सर वो घर पे क्वेश्चन हो जाता है, एग्जाम में नहीं होता। मैंने पूछा घर पे आप कैसे क्वेश्चन करते? तो घर पे जो वो क्वेश्चन करते हैं वो क्या करते हैं, ऊपर ऊपर से टिक मारते हैं। जैसे देखा, अच्छा कैलकुलेटर में करा, टिक मार दिया, नहीं, नोटबुक पे सॉल्व करो। ठीक है, you should solve all questions on your notebook, don't do auditing. ठीक है, अगर आपने ऑडिटिंग की क्वेश्चंस की तो एग्जामिनेशन कंडीशन में आप उसको सॉल्व नहीं कर पाएंगे. ठीक है, तो ये
Okay. Thank you, sir.
वेलकम. Students, please go ahead, raise your queries. Students, please note that sketch making is very, very important. It is very, very important in your IBS case study. Okay, you begin by sketching the business structure, information about key strategies, key stakeholder relationships. This may include flowchart, organization chart, timelines, or process map. Sketch making is basically first draft of your final answer. If you are able to make good sketch, then I am sure you will draft very good answer. Sketch helps pinpoint the central issues. First, I am repeating again. First, start reading with requirement part. This step will help you to understand which model, which standard, which concept is applicable here. Note down in your sketch making. After this, start reading case study step by step. Okay. If a question says to apply McKinsey 7S, then first note down all 7S in your sketch. Then start reading case study and connect case study's point with 7S. Note down all relevant point in relevant area of 7S. After this, write final answer. When you write final answer, your first draft answer or sketch will help. Okay. If presenting your analysis, a sketch quickly conveys your understanding and structure your thoughts. Index is very, very important in open book exam, but best index is your mind. ठीक है, सबसे बेस्ट इंडेक्स जो है वो आपका माइंड है. अगर आपने इंडेक्स नॉर्मल बनाया है, ठीक है ना, कई बार स्टूडेंट्स क्या करते हैं कि मिस्टर एक्स से ले लिया, वाई से ले लिया, उससे ले लिया इंडेक्स, उससे ले लिया. नहीं, अगर आप इंडेक्स बना रहे हैं तो पहला कोशिश कीजिए कि आप इंडेक्स खुद ही बनाएं. ठीक है, आप इंडेक्स खुद बनाएं. ठीक है, ताकि एग्जाम में रिलीवेंट कॉन्सेप्ट आपको ढूंढने में दिक्कत ना हो। लेकिन मेरा मानना ये है कि जो बेस्ट इंडेक्स है वो आपका माइंड है। अगर आपने वो कॉन्सेप्ट पढ़ी हुई है ना, तो आपको किसी इंडेक्स की जरूरत नहीं है, किसी इंडेक्स की जरूरत नहीं है। इंडेक्स की जरूरत उनको पड़ती है ज्यादा जिन्होंने कॉन्सेप्ट ही नहीं पढ़ा। ठीक है, तो बेस्ट इंडेक्स तो हमारा माइंड है, लेकिन फिर भी आपको इंडेक्स यूज करना है तो आप खुद से बनाइए। और किसी और का इंडेक्स यूज करेंगे ना तो आप कॉन्सेप्ट को ढूंढ नहीं पाएंगे और कंफ्यूजन भी क्रिएट होगा। तो इसलिए ये टाइम बाउंड एग्जाम है। In a time-bound exam, searching through hundreds of pages for specific concept, provision, standard is very, very difficult. A well-organized index allows you to instantly locate the right material like Ind AS 115, Section 149, 161 or Rule 9A. Rule 9A, which Rule 9A? Rule 9A is related with film production. 115 Ind AS 115 relates with revenue recognition. Open book exam don't test your ability to find information, they test your ability to apply. Having an index helps you quickly move from concept to application. Concept to application, again I am repeating application word, without losing your chain of thoughts. When you understand a concept at its core, you approach case scenarios with clarity. Don't panic if a question is framed differently. You can write very impressive answers, okay? But again, it depends upon your conceptual understanding. Open book exam like IBS test not what you remember, but how you interpret and apply the material. This means connecting dots. Connecting dots. Without strong concepts, you may find the right page but not know what to do with it. ढूंढ तो लोगे लेकिन आप कर नहीं पाओगे उसको। ठीक है, और हमेशा ध्यान रखना इलिमिनेशन कॉन्सेप्ट। For solving MCQs, please note that elimination is very, very important in MCQs. Whenever you are solving a MCQ, there may be there may be one or two options which can be easily eliminated, very easily eliminated. Eliminate them, strike them out. After that, apply your conceptual understanding to identify most appropriate answer. This is the logic behind solving MCQs. And practice a large number of MCQs. There is a query. What if the case study is from an industry I am not familiar with? The case study provides you all relevant context. You don't need to be an expert in industry. ठीक है, इंडस्ट्री में एक्सपर्ट होना आपको जरूरी नहीं है। Focus on business logics. Apply your core knowledge like taxation, Ind AS, compliances, ओके, कोई भी इंडस्ट्री का क्वेश्चन आए, कैसा भी आए, आप इजीली उसको अप्लाई कर लोगे. There is a query, apart from ICAI's material, what else should I study? Dear students, case studies on BOS knowledge portal are most relevant. Don't rely on shortcuts. Instead, revise key concepts from your module like financial reporting, corporate laws, tax, strategic cost management. Further, make your own summary notes. Okay. Students, please go ahead and raise your queries. What is the best way to practice for IBS paper? Students, work through IBS case studies. We have given more than 100 case studies on portal in various resources. After reading the case, try summarizing it in your own words. Then attempt MCQs without referring to material. Also discuss with your friends, colleagues, peers, or from small study group to practice the scenario and think together. Students, again, I am there is one question in my chat box. I am appearing for group 2. Although I have already explained, but this I explain in Hindi. Now I am explaining in English. The question is, I am appearing for group 2. How can I prepare for group 1 papers, especially for the IBS exam? Students, this is again, I am saying good question, a common issues among students preparing for CA final exam. There is smart strategy, which is if you are focusing on group 2, it is a good idea to pick 1 or 2 papers from group 1. Pick 1 or 2 papers from group 1 and prepare them thoroughly. उन पेपर्स को आप thoroughly तैयार कीजिए. Financial reporting. Financial reporting is very, very important for all students because this paper will also help you in your professional life. Currently, it will help you to pass this exam, but in future, this will also help you in your professional life. AFM. If you like calculations, then you may also go ahead with AFM. Okay. If you have good experience in auditing, then you may go ahead with auditing. But it doesn't mean you are ignoring other subject. I am saying to pick 1 or 2 subjects and must have deep understanding of those. But for other subjects, you should have at least basic understanding. Corporate law, regarding corporate law, I have already explained to you. Corporate governance is very relevant, and SEBI, LODR, FEMA, and regarding SETV, strategic models are very relevant. There is one more query. This query is IBS paper level expected in exam. Students, again, I am saying if you have good conceptual understanding, you can handle any exam. You can handle any paper. And for this paper, especially basic conceptual understanding is must. Okay. Therefore, if you have good conceptual clarity of strategic models, accounting standards, legal provisions, core concepts, rule, regulation, you are well equipped to get success in this exam. Students, please ask. Dear students, here is one important tip. In examination question selection is also very important. Therefore, in examination, proper planning is very important. A wrong selection in the beginning can waste your time and affect your ability to attempt full paper properly. Therefore, question selection is very important. It means you have to scan question paper properly. And one important point, start answering on left hand side page. Okay, this gives you right side for any rough work or calculation. It will be very useful. It will be very helpful during your exam. And always attempt all the required questions. Make sure you cover all parts in your exam. Okay. Thank you, students, for joining us today.
Thank you, sir.
Welcome. This was from our side. And if you have any query, you can ask us at ibs-final at the rate ICAI.in, or you can call us at 0120 3045 937. We will surely help you to handle this exam. Thank you so much.
Thank you, sir.
Welcome. Session over. Good night.